Hello, everyone. Simon here again with AvaTrade, and this is our weekly webinar. They called your weekly trading plan. And again, I want to welcome everybody, returning visitors, and of course, I want to welcome new people. And for you, the new the new traders, the new customers, the new visitors, I just want to explain in few words what this webinar means and what's the goal, what's the target of it. And like I always say, what helped me through the years, I've been doing it for over 21 years. What helped me through the years is really really making a plan for the week, making a plan for the day. And even I tried a while ago, I tried statistically to look, of course, the days that I didn't plan, they were not as good as the days that I did plan. And in a simple way, if you have a plan, you have a structure, you have peace of mind, you have direction, you have, you know what you want to do. And then you have less ability to do stupid things. And that's something that we're all suffering from, because those stupid things are the reasons why we actually losing money. Because the worst thing you can do is just jump on trades for no reason, without any preparation, and so on. So before we go any further, I would like to read risk warning for everyone. Any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be construed or applied as investment advice, recommendation, or suggestion. CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 71% of retail investor accounts lose money when trading CFDs with this provider. You should consider whether you understand how CFDs work and whether you can afford to take the risk of losing your money. Okay. And of course, the contacts at Twitter, at AvaTrade, and YouTube is full of amazing information that's being recorded and posted. You have all kind of tutorials. You have fundamental analysis videos and technical analysis videos, and a lot of very useful practical information that is there for you. You're welcome to visit that. Okay, and then what I will do now, I will switch to the MT4 platform. I'll switch to that. And before we go into analyzing specific instruments, I'd like to say a few things globally on the big picture, what's the focus and what's been happening, and what could be a potential influence of fundamentals in the upcoming week. So one thing we know, the NFP numbers, for those that are following economic calendar, the Friday, they disappointed on the number of jobs added. They were much lower than they expected, 500,000, and I think it was only 194, I think, thousand jobs added, and that's less than expected. But on the other side, that's why it makes the number mixed, and the unemployment rate fell to 4.8% to the 5.2 previous, so on the positive thing. So on the horizon is November 2nd and 3rd. That's the next Fed's meeting that they will start really the tapering process. And that's something that if you just look at the highlights on all articles on the market over the weekend, you will see things that kind of not scary but alarming. Found one. It says stock markets volatile October history means it's time to steady yourself for the black swan event. And it's funny because historically October's there were the crash months, and 1929 and 1987, the biggest crashes, they did happen in October, and that's why it's kind of a dark predictions are coming out there. Will it happen this month? When it happen? It's possible. we are in the air with all these robust moves since the lows of March 2020, when the chaos with pandemic and the corona, which is COVID now, started. And since then, the Feds were injecting $120 billion every month in different securities in the market. So that's a huge amount of money. That's 1.4 trillion yearly or something like that. So that comes to the end, or at least they start really squeezing it. And soon, probably the whole process will start in November. That's what they were signaling. Majority of the Feds were signaling that November should start the process, and we could see an interesting month. And with that saying, we're gonna move to the charts. And before that, I just found something funny that I thought I would share with you, just to mix the energy a little bit. The Barron's writes, the Michael Jordan wore Nike airships become the most valuable sneakers offered at auction. And here the sneakers, they are white and red color. And he wore the sneakers November 1st, 1984. And say could be selling for up to 1.5 million or Sotheby's luxury sale in Las Vegas. So that's kind of cool. Imagine somebody's wearing sneakers and then people paying $1.5 million for that pair. But that took a lot of work for Michael Jordan to reach that level. So good job there. Okay, so also I would like to just run really quickly, and again to remind everyone, it's important over the weekend to prepare yourself for the upcoming events, and economic calendar is a good place to look, like we mentioned in the beginning, NFP. So for this week, Monday, I don't see anything important happening, but I really encourage you to look at yourself. And then I think Canada, it's Thanksgiving Day on Monday, the 11th. Tuesday, we have unemployment rate from UK. That's important. Then on Wednesday, we have import, exports, and trade balances from China. It's kind of important just to see how things are going. We have manufacturing production from UK and industrial production from UK. Then we have Wednesday, the very important number from the States, the inflational number, consumer price index. It's coming on Wednesday, very, very important number. And we have FOMC minutes coming up on that day as well. That is on Wednesday. And then Thursday, we have inflations from China, consumer price index from China coming out on Thursday, unemployment rate from Australia the same day. Initial jobless claims from US also on Thursday, and then retail sales on Friday from China, and retail sales, which are very important, from the US. Okay, and as we're talking about retail sales, something came to my mind. I mentioned to my team last week, there's a lot of issues for retailers. There's a lot of ships shortage and container shortage, and the prices are skyrocketing for those. And a big players, Target, Walmart, and I don't remember the third one. They're actually chartering their own boats and trying to bring enough merchandise so they wouldn't be empty for Christmas. So I assume, logically speaking, if that's the big issue there, we could see Christmas sales not so great if there's going to be shortage of products. And in general, Christmas retail sales are kind of giving a boost for the year. Usually they're giving an uptick to the market. So that's a lot of pressure on the market. So we have Feds, we have possible interest rate increase starting next year. We have pressure on retailers and so on. We have energy crisis all over the place, oil and natural gas. We'll look at them in a moment. So a lot of pressure, a lot of things, and who knows? Maybe we are due for a black swan event, something crazy happening, affecting the market. So, okay, let me just double check that I'm connected to MT4. Okay, wonderful. So as far as individual instruments, I have a plan for us today. We'll be looking at about 10 stocks at about 11 Forex pairs. I chose the pairs that really close to the levels that could give us some potential trades, entries. And we'll talk about oil, natural gas, wheat, gold, and palladium. And of course, indices. So let's start from indices and let's see how the week really played and what to expect the upcoming week on indices. I started with Nikkei. Nikkei really had a bad week. That was a huge drop over here up the current move. So we came right back where we started, and this was in end of August. So the whole September pretty much went high, and then in few days we just erased all the gains, and it's pretty weak there. Now S&P 500, S&P the last week was a positive week, but let's take a look. Low 42.60, and the last week was 42.67, and we made a nice move from it. So this level, the 42.60 level, it's a key level. Should the market start tipping or continue going lower, we should see, in order for it to really get more intense to the downside, we want to see the closing below 42.60 on daily chart, and some sellers coming in. So far, we've been holding this level, and you can see it on daily chart. After a move, we came back, retested. We couldn't touch it again for 3 days, and then we went higher. The only thing, Friday was a selling a little bit, but the previous days we had a very nice bounce on indices. Similar idea on Dow Jones, and similar idea on NASDAQ. Okay, let's take a look at FTSE. FTSE actually had an up day on Friday. DAX had a down day on Friday. CAC 40 down. And of course, our Nifty 50 is holding as the champion. It makes me smile every time I look at him. Okay, so indices, again, let's use S&P as a general indication. Um, uh, we could say that we can go higher from here. I really, again, my opinion, we're gonna have a hard time breaking 44.20. That's the Thursday's high. But if we do, we should see some closing actions above it, 44.20. Most likely, we could see with all these articles over the weekend and a lot of build-ups on the gravity side, we'll probably see potentially even a gap down on Monday, and continuation to the downside. As I said, 42.60 will be retest for a potential move lower. Again, any scenario is possible, but there's a lot of pressure on the markets. And one of the I just read somewhere one of the big investors. I'm not gonna quote his name because I don't remember. But I'll try to find it in a moment. So it will be the source. Okay. It seems like the bulls are back in charge on Wall Street, but the legendary investor Byron Wayne, it's W-I-E-N, says that buyers shouldn't get too euphoric. And he's expecting, he doesn't expect, or he says, I don't think there's a lot of upside, not a lot more value than current values. And I'm quoting him. He told Business Network. He said that he's foreseeing that S&P's full year earnings per share, or S&P's, will be 225. Okay, those are just the numbers. Basically, he doesn't expect any moves higher. The values are high for the S&P and equity markets. So a lot of build up to the downside. And as we went through the indices, we probably look for potential move lower, and retesting the lows, the recent lows that we bounced from. Just take a look. We bounced from here, we bounced from here, and we had a nice run, and then we just went down. And in the weekly chart, you could see it nicely. We had a really steep move higher. And this week, I think, was the biggest losing week in a while. And we'll be watching this week. Okay, so that's as far as indices. Let's move to commodities. Oil is very, very strong. Some predicting the price to go to 100. And as we spoke, the moment we broke this level 76.60 level, which is going higher, very, very strongly. So the whole week we were high, and we closed almost on the highs. Friday actually closed the high of the week. We went as high as 80. We touched 80.10, and we closed at 79.56. So we give back $0.50. So there's a possible continuation to the upside. On the monthly chart, it was just in a brand new area here. It could be anything. It could be 90, 95, 100. It could be anything. Visually, if we look at it, the whole move down started from here. So that's the high of 106.07. So potentially that could be the destination that oil is trying to reach. So a lot of pressure here. And as we already look in oil, let's take a look at Chevron moving higher, ExxonMobil moving higher. They're also approaching their resistances here. And natural gas, we spoke about natural gas. We did touch this level that we said that they possibly could get there. And there was 636.9, and then we sold. And the move down came right after they announced that Putin is trying to get involved and save Europe from the energy crisis. And that's actually what happened the last 3 days. So that's on the 6th, and then we moved a little bit lower here. So again, we're trading around this level here, which was 564, and that's actually where the whole move stopped for a while. We had a very nice correction here. So it could be that we'll be playing around this level over here, 564. And if we have a hard time breaking, we could go and maybe close the gap, or go to retest the recent pullback at 473. It could be possible also. The opposite could be possible as well. If we start closing above, we can go retest the highs, like we said in the previous meetings, that the moment we start closing around 634, it's creating an opening similar to oil to the upside from here. So that's the natural gas for us. Gold, popular gold, it's very hard. It's not doing anything. It's trading pretty much in the same level with the spikes up and down. On the daily chart, you could see it better. A lot of tails, a lot of spikes. This happened when NFP numbers came. We went higher, then we closed below this 1761 level, but we're still about 1750. As we said, 1750 is kind of a balance zone, around 1745, 1750. It's kind of if we're trading above it, we're holding it. If we go below it, we bounce right back. So we should see in case gold decides to go lower, we should see some real activity below 1745 level. And if it's going higher, about 1760, really strong buildup. Meanwhile, we really showing that 1761, 1762, it's a resistance. Even on Friday, we went higher, we closed way below lower. So it's a lot of pressure on gold for some reason there. We spoke about palladium and a possible shoot up, and that's exactly what happened. Very nice trade over here. We came to triple test 1822, and then it was a very nice move. very strong move on palladium. For those of you that were prepared for this and took it as an opportunity, beautiful. And as of now, we are right at the previous level of resistance. And let's see what's next. We could, of course, we have to watch gold as a partner. And if we start closing higher, we could go a little bit higher here and look for some resistance. And considering that this move was huge and it came right here, so the same way it was a kind of a triple bottom, it could be a kind of intermediate triple top that will probably bounce right back to certain levels. So we have to be watching this 2066 level very carefully. But this was a very good opportunity from here with some patience and very, very small stops, as we mentioned. Take a look how beautifully it touched it. It went really, let's see, 1832.40 low. Yeah, it went down like less than $2 below the line, and then it shoot up. Beautiful trade. That's what I love. I love to see these things. Wheat, we again the same thing. We had the triple top here, and then we bounce back straight down. We'll probably come to retest 722 and a quarter around this area. We'll be watching this as a possible buying opportunity, and of course, if we break through and start building some bearish formations here, price action to the downside, we could see a nice move lower from here. So we'll be watching it. And corn, I'll just quickly look. Corn is very hard. We spoke about it, a potential head and shoulder. It gave us a little bit of hope here, but then it came right back above this neck, and it's really trading here. So we have to see some decisions. So far, it's really choppy here. Okay, so we finish with indices and commodities. And what I want to move now, I want to move to the pairs. Like I said, we have I prepared about 11 Forex pairs that have very nice levels to look for. So CAD JPY, as oil is going higher, Canadian dollar has been super, super strong. And for those of you, just a reminder, Canada, big exporter of oil, and the price of oil really directly correspond with the value of the Canadian dollar. So with a super crazy move up here, let's take a look at weekly chart, 3 straight weeks up, and then we are approaching a level from which we really fell through the floor. So the high here was 90, let's say 90.09, okay, and we're getting close here. So again, it depends what oil is going to be doing. If oil continues higher, we can continue high here, but we could have a hard time considering there's a super vertical move up. Again, you can't dismiss that we can go higher from here, but potentially this could be a shorting opportunity, at least temporary, for possible pull in. It could be anything. It could be this level here. It could be this level here that we can expect for this pair to fall. So if that's the case, we could see a potential move of 200 pips. We coming this recent move is coming from 85 to 90, about 500 pips. So a nice correction could be done here if we use Fibonacci retracement and we're using a 39 level or 23 level, but let's say 39. So this could be the level we come through. So it's close. I think the level of resistance here, about 88 and a half, would be a nice potential profit should we fall down from this current resistance of 90.09. That's a nice 150 pips potential move to the downside. So that's CAD JPY, and it's on both ends because as you will see in a moment, Japanese yen has been really, really weak. And you know what? I'll just bring it up now. Take a look. Euro JPY is breaking through the highs. and we'll get to that in a moment. So next pair, Aussie CAD, same thing, involved Canadian dollar. We actually came and retest this level. We failed to go lower, so this 0911 level, it's a strong support in a way. We bounced recently from here, and this could be again retest and going higher. Again, it depends. It depends what oil is going to be doing, of course. So potentially we could move from here. Let's take a look at weekly chart. Weekly chart, you could see how beautifully this could be a very, very strong level of support. Here we bounce. Here, very, very strong build up. We refused. So a lot of pressure was on this level. Then we went lower as we failed, and then we came back. And within really 3-week attempts, we broke through it, and we went higher than the previous highs. Very strong, and then we slipped right back to it. So very, very strong level. So just a scenario, if a trader were to buy around this level 0911, the low of Friday was 091.04, 7 pip stop. Okay, people can use 10, 20, 30 pips, depends on your plan, on your strategy, but the potential is high over here. Okay, so that's Aussie CAD, beautiful level to watch, and we're sitting right on it. Next one, Aussie JPY. And like I said, I chose this instrument specifically because they are reaching the level. So it's something that we don't need to wait and guess. There was a move high here, we retraced, then we came right back to retest 82 level. Okay, 82 level. Let's just break it into 1 hour chart. See, we broke through it, and then we're sitting right there. So just to watch it. I'm not saying it's going to go straight down, straight up, but really it's very important what the instrument is going to do next. Okay, next one is Aussie NZD. Aussie NZD, right here, we had a hard time breaking, and then we went lower, we came back. Thursday, we closed higher, then we retested it, we closed higher again. So it could be potentially that we're opening for the next move high over here. So we'll be watching this level. We couldn't close below it after coming to it, so it's very, very strong bullish formation here. So we'll be watching Aussie NZD on a potential continuation, and of course the opposite could happen. We can go and retest, but so far it's very strong. We build up here, we moved, we build another build up, we move, so we can continue. Let's see, potentially we continue to 106 area, and that's about 50 pips from now. Let's see. Okay, so that's Aussie NZD, CHF JPY, same thing. We coming to strong levels over here. And we touched it on Friday. Let's say 121 level, just for convenience. And there was a very, very strong move. Let's take a look. A lot of actions around this level here. They were just trying to fight this level. Here, very, very strong resistance from which we moved. We made a lower low from the previous lows. And then with a nice pullback, we came to retest this level. So 121, very serious level over here. We'll be watching it, of course. EuroCAD against Canadian dollar involved. It just fell through the floor, and it's on the way to retest the low. And this level is, we're talking about February of last year, February of 2020, and it could be that we're going to retest it, or another scenario. There's also a lot of actions we're here. It could be that we stop right here and we bounce. Again, it depends what's going on in Europe and the oil prices that are bringing Canadian dollar higher. So we'll be watching EuroCAD, GBP CAD, also 3 straight weeks down, and we are approaching potential support around here on 169.52. 3 weeks straight, it could be due for a nice correction. Okay, of course you can also put this level, but I like to use the levels that make more sense and take a look. A lot of actions here. This is the weekly chart here, and then this huge week stopped right here. So low of this bar was 169.52, and that's what I chose, that level. We'll be watching it very, very closely for possible bounce over here. Pound yen. Pound yen stopped, closed exactly at this previous level of resistance, which was strong, from which we really dropped. And the high here was 152.84 and 152.92, but we closed at 83, a pip below this level. So 152.84, very strong resistance over here. We could try to move a little bit higher here, maybe retest these levels here, which also valid. We actually moved from here, so there's a possibility. So basically this area, we're talking about 30, 40 pips. We could have a lot of actions over here, and possible continuation, or it could be a continuation higher. But seeing that we're really at the highs or close to the highs, there's a potential of bouncing lower from these levels. So that's pound yen. USD CAD, it's been selling. We broke the trend line, and we are also approaching, this is the level where we stopped, and then we play right here and right here. So 124.80, let's say, the area, and let's see what happens here. We closed below it. Let's see how this week plays. If we start building up, closing below it, there's an opening for continuation to the downside. And if we lift the head high and start building some strength, and again, I'll repeat it, if the oil starts selling a little bit from these high levels, then we could see retracement or move the opposite move to the upside on USD CAD. So that's USD CAD. NZD CAD, again, CAD involved, a lot of CAD involved. And right here, we really coming to the level of strong support, a lot of support here, here, and here on daily charts. This where the move starts. The low here was 0.8641, and we right here, we close right on it after this tremendous move down. So on the weekly chart, you can also see a lot of testing on this level. So very serious level we'll be watching, and the way it came to it, really large bars, it signaling the potential reversal is possible over here. But again, we need some weakness in oil that will cause weakness in Canadian dollar. So 0.8641 level on NZD CAD, and the last one we'll be looking at today is USD JPY. Beautiful, beautiful trade, and knowing the level, I love this thing. This gives me a lot of excitement when things make sense. Take a look. You know, it was a lot of accumulation, and they had to come and retest these levels. So the high here, 112.22, and the high here, 112.24, 2 pips higher than the level. This is weekly charts. I just want to again stress it out how important the levels are, and whoever says the levels don't make sense, you know, I'm not going to argue, but they're probably wrong, because right here, I mean, there's no coincidence. 2 pips difference, and the level that we're looking at, February 2020. Okay, almost the year, and we're back to the same level, and it's going to be very interesting to watch what's next. And take a look on the monthly chart, how important it is when you really zoom out so you see the picture. You know, if you look over here, it looks like, wow, we're flying in the skies. Then yes, flying in the sky's getting a little bit lower. And if you look at the monthly chart, all we do is really trading the range. Yes, it's a wide range, 106 to 112, but that's beautiful. How really we have to understand where we are, and take a look. Now you know that you squeezed against the ceiling, and over here we had a temporary move down, and then we came right back into the channel, and pretty much all this action is happening inside the channel. And let's just see how long it takes. All these things are important. All those puzzles in your trading experience. So you need to know what's happening. This is a 56 months. We are pretty much in the range. Okay, that's almost 5 years. Okay, so few things. 112.20 could be a breakout here, especially if the dollar continues getting stronger. We could have a breakout, and like over here with it, or here we had an attempt straight through the level and going higher, and so far in the past months it was a hard thing to break. So we had a failed attempt, and now we're really coming to this level. And let's see on daily chart. Yeah, we just see, we're back to daily chart. We just see the buildup. I just want to see what's happening 112.20, and we'll be really watching this level. I'll just zoom in. Okay, it's a big fight, 30-minute chart. We came through it after a long time not being there, and we had an hour and a half really trading above it without touching the level. That's strong. So it could be potential move higher, or of course the opposite. We could see a little bit of a correction like we had here, or we can move down. We're not here to predict. We'll be watching and acting accordingly to what we see. So that's USD JPY, and that's it as far as Forex pairs. We went through enough to focus for the week. And before I go to the stocks, because sometimes I forget, let's take a look at Bitcoin really quick. We said we broke out of 50, 55, 56,000. It seems to be resistance. So this initial move was 55,679. Then the following day went lower. We had an attempt to break through. So I guess 56,000, 55, 56 is the level to be broken in order to go higher. And of course, we can always go and retest the 52 and a half, 50, whatever it is. And fundamentally, it's important for me to mention the U.S. Feds and Treasury. They really said they have no plans to ban cryptocurrencies. They're not going to follow what China did. And on that announcement, actually, it helped the Bitcoin and other cryptos to move higher. Okay, so let's go into stocks, and we'll wrap it up with that. Facebook, okay, the level 332, it become a very strong resistance after recent fall. Just to remind everybody, first there was an issue with the chief technology officer leaving the company, and then there was a testimony on television. They said that the company is putting profits before safety and so on. And there was a shutdown last week for 6 hours of Facebook, Instagram, and WhatsApp that cost the company about $40 billion loss, and Zuckerberg personally lost over $6 billion. They were losing 164,000 a minute or something. There's some numbers that I read, crazy things. Anyway, a lot of pressure after the sell-off. There's not really a bounce. So it could be potentially, if this thing becomes worse, we could see a continuation to move to move lower over here. So the level over here, 132, we'll be watching as, let me just move this. Okay, so 132 level, potential a new resistance for Facebook. General Motor had a very nice move. They announced that by 2030 they'll double the income, and they're chasing Tesla and so on. This was the level from which we fell, and we right back at it. So 58.55, 58 and a half. Let's see how we play with it. Of course, if the market pulls in, everything will go down with it. So let's watch GM. JP Morgan continues going higher, very strong. This was all-time high on Thursday, 171.40. We failed on Friday with the market moving high. We fell going, so that's our kind of a intermediate or next resistance, 71.40, and potential pull in. Just to mention again, we spoke about the Chinese. They have a great company that they're on the edge of bankruptcy, and there are a few other big companies. I think I forgot the name that also have issues, and they failed big repayments on the loans. So we could see some banks being affected by that. So JP Morgan, let's watch this week for potential pull in, because this move was very aggressive with gaps. You know, every time the gaps are happening, sometimes it's a shakeout before a change of trend. So this could be a case as well. Microsoft, we came back to these levels here, and with the market actually bouncing, Microsoft the last 2 days was sitting the same level, 295. It's a key level for it. Let's see what happens. It could be potentially pulling in on Microsoft. Netflix, after this high on Thursday, was the high was 646. We pulled in, and we're actually sitting here. So potential continuation to correction to the downside for Netflix. Tesla. I've read some articles that say some updates for self-driving. It's a little bit delayed, according to Elon Musk. So let's see. So far, we mentioned last week 779, 780 area. We actually established support about it. So we are pretty much with a head up about 780, unless we come in and start building some selling formations. So far, we're really open for continuation to the upside. Let's see what happens. And Uber caught my attention after all this action and gaps and moving higher. We facing a previous resistance right here. The high here was 48.11. So 48.11, we could see a potential reversal and dipping on the stock to the downside. You can see on the weekly chart as well. So that's Uber. Amazon, choppy, don't see anything there. Goldman Sachs back, as we said about the banks, it's back to 392.5 after traveling a little bit back and forth, and we couldn't close above it. So potentially bounce to the downside, and the play is the following. This was the support from which we bounced. As we said, it was a very strong level around 372. And if we're not going higher here, then we're going to slip right to retest it, and this could be a triple bottom, which on the falling market could cause Goldman to fall through it. Or if we hold it, we're going to start really establishing this channel, which we are already. So between 372 and 392, about $20 channel. Interesting. Walmart, beautiful. There's one pension fund that manages about $30 billion. They're buying Walmart, and we did have a plan for Walmart actually. And 135.60 area, we said the previous support could hold, and we did dip below, and then we really moved nicely higher. So we moved about $4 from the level in the past 3 days of trading. Okay, so potentially it could be again. I like to say there's always two scenarios, right? In a funny way, it could go higher, it could go lower. It depends how convinced they are that it's time to go and retest the highs, or maybe it was just a temporary correction before continuation lower, because there is space to go lower. And if you look at the monthly chart, there's a lot of space to go lower. So we'll be watching Walmart on potential move. Nike also had the bounce from this level here. We said 146.50 previous levels. history repeats itself. It was a little bit of scary moments here, and then at the moment we broke this level on the upside again, 146.50. It was a continuation, actually, very robust with the gaps. So we're back at the resistance over here. So that's Nike, and that's it pretty much. I want to wish, first of all, of course, I want to thank everyone for coming and attending the webinar. And as always, I hope that this was useful, and then you'll take it with you for the week and make your plan. And then, as they say, and I'll say it again, plan your trade and then trade your plan. And as always, make sure that you manage your risk right. You manage your funds, equity, that you're not exposing yourself to the higher risk that you can afford. And have an amazing and productive week, everybody. All the best.